guys, and with this video I'd like to show you and explain the power of Camarilla pivot points. It's an indicator. It's actually the only one that I use on a day-to-day basis, and all, or maybe I would say 90% of my trades are based on that indicator, and I'll show you right now why. So basically, right now we are looking at the New Zealand dollar and Japanese yen on an hourly chart, and based on my back testing, the best results are from this indicator are based on an hourly chart. I've tried lower time frames, but it wasn't as effective as with the with an hourly chart. So as you can see, all of my charts are 1 hour chart, but it's not the only time frame. My trades are based also on a technical analysis of higher time frame, like daily or a 4 hour chart, just to see some strong support or resistance areas, but for that I also use a weekly pivot point. It's just sometimes, like for instance here, the price went down and it got stuck at the weekly support and then went up again. So basically, it's not just an hourly chart and that's it, because you gotta see also a bigger picture, like for example a daily chart. For some traders, maybe a weekly chart, whoever likes whatever, I don't know, just that's my personal preference. So basically, this Camarilla pivot point is based on a pivot point, support areas and resistance areas. The difference between a standard or classic pivot point and a Camarilla pivot point is by calculation of previous day. So basically, this is Camarilla point based on a daily chart. So all these levels are calculated by yesterday's or yesterday's candle, daily candles, but it's not like with classical pivot where you go OHLC. This goes just open, high and close, and basically the thing how you use this Camarilla is that you are looking at S3 level, which means buy, R3 is sell, then R4 level is long breakout, S4 level is short breakout, R5 is a target level of the R4, which is the long breakout, and S5 is the target level of the S4, which is short breakout. And basically there are a couple of scenarios how you can play the trading. The first, and it's mostly traded scenario, is that let's say this pair was open between R3 and S3. It usually does open between those levels, which means that the market or the currency pair is in a range, and once the market opens between those two levels, we are watching where it goes or which level it hits first. For example, today it hit R3, which means sell. So what we are looking at is we want the candle to break above, close below, and on the next candle, new candle, Once it breaks above and closes below, we sell on the open of the new candle with pivot point as the target number 1 and S3 as the target number 2, where we could go, for example, we could go long again and just play the range. So but it doesn't mean we have to go long and short. This indicator doesn't tell us to go short or long. It's based on many different rules, like for example, is it against a main trend, or which means it's a counter trend trade, or is it a trend trade, which is the probability that we will hit our target is much higher than the counter trend. So basically it depends on many different aspects, but the point is, once it breaks, like for example right now it's breaking our short level, the R3, and I'm looking for the candle to close below that. It broke above again, I want it to close below, and then I would go short with my target 1 and target 2. The same would go or apply to a long trade. So let's say for an instance that the market or the pair would go at the opening here below instead of going up, and I would be looking for the candle to close, to break below, close above S3 on the new candle. I would go long and target number 1, which is a weekly pivot, and target number 2. So that's a couple of rules that you can play with the first scenario. Second scenario is that for an instance, let's say this candle would break above R4, right? The R4 means that it's a long breakout, and the probability is that it will go higher, which means that I would go I would wait for the candle to break above, then retrace or retest this level. On the retest, I would go long with target number 1, which is a weekly resistance, and target number 2. Okay, so let's say for an instance that this candle went up, made a new high, lower high, and now it breaks above. So this candle, let's say it would go straight up here above this level. Then I would apply this kind of trade, which means I would wait for the candle to close above this breakout. On a retest of this level, I would just go long. The same applies to short trade. Let's say that from here the price would just go way below here, right? So I would be waiting for the price to go below S4, then retrace, and on a retracement I would just go short with my target S5, because this level S4 means it is a short breakout. Certainly once it goes below this level, we would have to watch also how the price behaves around the weekly support, because like yesterday and 2 days ago, you know, there were some shadows on the candles and just went up. So it might be also a good place, you know, to go long and to play like a double bottom, but you know, it's too early to say that. I also drew a rectangle or a zone, resistance zone, so I would be looking, you know, to look for a nice short trade. So right now the candle is pretty much nice. We still have like almost half an hour to go. So once this candle closes, for example, like that, then on a new candle I would just go short and play the scenario number one. So I showed you already two scenarios how to play the trades on with this indicator. Another kind of trade could be, or would be, if the market opened, let's say for an instance, below S4. That would mean that, let's say, the market opens in the morning here, right here. Then I would be waiting for the market to go either back here to S4 and like a retracement, and then I would be shorting it below here with my target S5. But the thing is that once this would happen, I would be waiting for candle like, for example, this. I'll just show it. So where are you? Here. So for example, okay, another good. Damn it. Alright. Okay, just 1 second. So I would want the candle to break above and close below this level, and on a new candle I would go short. So that's what I would be looking for. If the market would go much higher and let's say it would hit S3, then I would be waiting for the market to break above, close above, then wait for a retracement and go long with my initial target number 1. Just remove this, and then initial target number 2 here, R3. So I would be just playing then scenario number 1. So every time I would be just looking for the market to go, or to go to those levels where I could play the scenario, which is either breakout, or a short, long. It depends. There was a trade, let me see, Euro British, I believe. No, Euro British. No, let me find it quickly. Oh yeah, right. For example, British pound. So British pound today, it opened above R3, went above R4, closed above, broke above, closed above, and then you go long on the next candle with the target, right? Well, it happened at night, so I couldn't take the trade, but it's just an example. Then there were a couple of news, and the dollar got much stronger, went back down, but it broke below our R3, but it didn't also close below. It went back up with a candle like that, which means we are not shorting here, and we always have to wait for closing of that candle. So for example, right now it went above R4, that's a Canadian dollar, Japanese yen, R4, right? So which means it's a long breakout. It went above, but didn't really close above. It closed at the level, so it's kind of risky. And me personally, I was expecting today that from R3, and it was in the morning at 8, that it would just go lower. And this is very important to remember, because this candle was perfect. It broke above and closed below. On the next candle, by the rules, I would want to go short, but because I was looking at this, bullish trend, short-term bullish trend. I didn't really want to go short. I wanted to see the retracement to this level, and at S3, which is my long position, or could be a nice long trade, I would wanted to go long with my target R3 initial target. It's a weekly resistance, but it broke above, so I'll just be looking to go long. I didn't take the trade because the way it closed, it is within a trend. It's a trend trade, but you know, I wanted to see some retracement first before I would go long, and it didn't happen. It went long. It's like 4.5 pips right now, but I'll be still looking for some kind of a retracement. Same happened here. And one more thing, and it's like my fault. I don't know what I was thinking. I took the short trade. The thing is, it broke above and closed above, and then the candle went down, and I don't know, it just was early in the morning, and I just hit the sell. I wanted in the trade to go here with the S3, where I would go long again. It's here, you know, I drew a rectangle or a zone where I would just go up. And the thing is, I didn't wait for some reason. Didn't wait for the trade, the candle to close first, and I just hit it when it hit my R3 again, and you know, it was against the rule, but I didn't close the trade for one reason, and it's this, you know, it went just this trend line, and it broke above. So right now, you know, I'm kind of hesitant, and I shouldn't do it, so mea culpa. But you know, it was not really trend trade based on the trend which goes bullish from 8 already of May. So I just took a short with a minimum position. So if it plays out, I might make some little money. If it doesn't, then I won't lose much money. And still, if it goes down, then I'll be looking for retracement to this level, from where I would just go with a trend trade within the trend. So we'll see how it's going to play out. So basically, that's a Camarilla. Camarilla beautifully shows you all the trades within the trend, against the trend, breakouts. It's very, very nice, you know, to see how it plays out. So back to New Zealand Japanese yen. We have like 18 minutes to close of the candle, so once it closes, then I'll be looking for short at this level here, right here. That's 76.30. That's where I would want to go short. with my initial target here and there. So basically that's all for Camarilla. It's a very powerful indicator, and the rules are so simple. You just follow the rules and that's it, you know. Maybe based on my back testing, it's like 70% probability that you will just hit a profit. So yeah, if you have any questions, just write me a message at Minerva FX on Twitter. You can find me on Twitter, where I share all my charts, my ideas. See you then afternoon on American session, where we have some more news. So I hope that the market will start to move like normal market, because right now it's kinda dead. So you know, I'll be waiting for the news from US. Thank you very much, guys, and see you then later.